Is a slowdown in China causing a commodity price collapse? Is a collapse in commodities causing a China slowdown? How are these things related? Well, I think one of the things we have to look at is Chinese central bank policy. Now, remember the Chinese government has a gigantic foreign exchange reserve. There have been comments about how much it's come down. There was some Bloomberg story this morning. I think I'd be very careful about trying to figure out how big the Chinese government's wallet is. Because it's a very complex thing that has a lot of moving parts between importers and exporters, forward settlement, spot settlement. So it's very hard to figure out exactly what is going on in terms of Chinese FX reserves. But it's very clear that the government is very involved in the capital markets, like it is in other places. But in China, there's no pretense of a separation between the Reserve Bank and the government. So in the UK, there's a pretense that George Osborne doesn't tell Mark Carney what to do. In the Federal Reserve, that there's a pretense that Janet Yellen and the president don't speak to each other. And there probably is some separation. But in China, that's not the case. So actually what the government does is incredibly important to the market and to all of us. And so the reason we look at the renminbi, devaluation is not really the right word, the revaluation, is because in my mind, it was a great policy executed at exactly the wrong time. So in other words, to allow for a more free-floating Chinese currency, to allow for the country to be included in strategic deposits, allow the country to maintain more of a preeminence in terms of the world currency markets, are all the right things, except that they chose to do it at a time when we already had concerns about decelerating growth. We had a lot of volatility in the Chinese stock market, and we had a fall in commodity prices. If you look at a chart of value of commodities traded in the world, the number one is obviously oil, right? And that dwarfs all of the others. But then if you look past oil, so iron ore, other things that are related to industry, related to transportation, what you find is that China is a gigantic presence in those markets, as you know. So one statistic is that China consumes 57% of the world's iron ore production, and Australia produces 47% of the world's iron ore. So effectively, Australia is importing all of its iron ore to China. So the reason the Australian dollar is trading 69 cents is because of that relationship. And so the suggestion that Chinese economic growth and commodity prices are tied is incredibly important. The question is this an overshoot? And does it make sense for there to be such a fall in commodity prices given what we know about Chinese economic slowdown? We've done research on companies within China. So what we've done is we've gone to business leaders in different companies in China and actually asked them about their business. Statistics that come from the government are a little hard to read. They're a little bit delayed. But we asked these companies about how they see their business. And actually, you have to skew it a little bit because they're not going to say everything is terrible, right? There's a certain inflation that they're going to have. But the reality is that they were much more upbeat about the economic prospects for their companies than we would have thought, particularly given the economic releases that we've seen, and in particular given the volatility of the Chinese market and of commodities more generally. And the long and short of it is that these asset price performance is in many respects, I think a confluence of, clearly there is a slowdown in China. It's not a hard landing in our opinion, so 5.5% to 6.5% growth for China. It's part of the policy of Federal Reserve monetary policy is coming at least to an end, at least beginning to see increases. And finally, what we're seeing is that, as I mentioned before, these assets here, which have had very little change really, are those that are controlled by the world central banks, and these really are reacting to developments in the fundamentals and reacting to what we're seeing in the global economy.